Cool, fantastic. And we started. Okay, brilliant. Welcome everyone. Shout out specifically to those of you guys who were here on time. Do you know what I mean? You came early, you came a couple of minutes early. Really good to see all of you here. Welcome to Sunday study sessions. Today is Sunday, and I am Nate. You've just been listening to the amazing, shout out Stanley for that, honestly, the amazing Nas and Lauryn Hill, man. That track is so cold, honestly. I've probably been enjoying that one recently. How's everyone doing? Is everyone here? Who's actually present? How's your week been?
Yeah. Been good, been good.
Large up, King, large up, large up, large up. How's your week been, guys? Has anyone got anything interesting happen this week? Anyone catch any good trades? Anyone learn anything cool?
Crypto is on fire this week. Great trades from Relic, man. All hitting TPs. Oh boy.
Yeah, nice one. Brilliant. Yeah, cool. Who was that? Who was on fire? Stanley, who was on fire specifically? Anyone in particular?
I think he said
we
Sam.
had DMC and Sam.
DMC and Sam, yeah? Okay,
yeah.
Nice.
So it was Bitcoin and Shiba and quite a few cryptos, you know.
XRP.
All those signals were in TPs. Fire.
Nice. Okay. Yeah, cool, man. What else have we got? What have we got in the chat? Daniel said just losses, nothing else. Boy, I feel you, Daniel. I definitely feel you in that one, bro. This is why risk management is so important. How's your risk management, bro? Have you did you lose much, or were you like, was it kind of small losses? Hopefully they're only small, bro. This is one thing that I've been thinking about risk management is with the market is so volatile. Doesn't matter how good a trader you are, right? Doesn't matter how many Sunday study sessions you go to. It doesn't matter how many videos you watch on Wow. It does not matter how talented you are, right? The market could just dip and tap your stop loss. You're guaranteed you're going to lose trades. You know, if you're a trader, you're just not going to win every trade. And this is why risk management is so crucial. Do you know what I mean? If you can get a really good risk management strategy down, then yeah, those little losses, they're going to bug you, but you know, it's going to be like when you step on the Browns on Monopoly and it's going to take a little 50 quid and it's going to annoy you. And then, you know, someone's going to come and step on your reds or your blues. Yeah. 0102 lot size. Okay. Nice one, bro. Good to see. Prima, been studying indices. Yeah. How is that, Prima? I've not really studied indices much, you know, other than, well, no, that's not the same. Yeah, I've not really studied it much, to be honest. How's that working out for you? How's that going?
Greetings. Good afternoon, everybody. Oh, Nate, I'm loving indices. I've been studying in the demo. I've been in the Wow a lot more. Like every day, it's been an hour.
Nice.
Just taking advice. Like, I think I was saying this to Gemma the other day. I thought I was coachable until I started taking advice from Carl and Kasim, and I realized I was never coachable. I just wanted to do it my own way, and my own way was blowing my accounts. And I was like, no, I need to start like everybody else at the beginning. There's no shortcuts. So just being in Wow, I love indices because it moves a lot quicker than Forex, and my personality is very much like, I need things now. I want wins right now. I want the money right now.
Where's that Aries? Where's that Mars?
Mars in Virgo.
Come on, I want it now.
So I need it now type of thing. So indices really is my personality. So it's just finding a currency pair that matches that and gives me the wins. But risk management, you speak about risk management, and that's something that Justin, Ronaldo and Jen, they really hone in on. Like, your risk management is vital to you being a successful trader. So I'm having a really good time with your study sessions with Wow. I'm really I'm becoming the signal, as Carl always talks about. You become the signal. So I'm seeing that I can enter in trades myself, So yeah, I'm having a good time. Some losses last week, but also some wins.
Come on, Prima, we love you, man.
Small wins. I'm just starting with 0.01 lot sizes.
good.
I ain't looking to move until, you know, I see something bigger. So I'm happy.
You're ready to
I'm
move.
right where
Yeah,
I'm meant
yeah,
to be. So I'm very happy.
excellent.
Thank you for
Thank you so
asking.
much for sharing that. Yeah, no, thanks for sharing that. Thanks for sharing that. We appreciate you as well. We appreciate your consistency, your example, your spirit, your energy. Honestly, thank you so much. And your comments, you know, in the group chat.
I'm trying, brother. I'm
definitely.
trying.
Yeah, thank you.
It's hard, you know, it's hard because I'm stubborn. I like doing things my own way. I don't like to take people's advice. But when I'm losing money, I'm like, listen, you need to do something different. So
Yeah.
I'm being
Okay.
patient.
Nice. I think I'm
Yeah.
gonna talk. I think we're gonna do risk management today. You know, I had planned on kind of just doing like a quick run through of everything. But I actually feel like today, given the way the conversation's going, I feel like today a better focus would be risk management. I'm gonna be away for the
definitely.
next couple of weeks. So the next weekend and the weekend after, I'm doing some driving work for a friend of mine who runs a business. So I'm definitely not going to be here. I'm going to reach out to a couple of people, see if I can get them to cover the Sunday study session. So hopefully I should still keep running for those 2 weeks. But I wanted to kind of make sure that at least the last thing that I say to you guys today was something that was impactful, you know. And I feel like given the conversation that we're having, risk management definitely feels like a good focus. So that is where I want to take today's conversation. Is everyone okay with that?
Yeah, definitely.
Yeah, we're recording. We're recording.
Sorry, Nate. Just quickly, can't you record for the 2 weeks that you're going to be away? Can't you record?
If the session's on, it will definitely be recorded.
No, there are a couple other people who, like Albert, stepped in and helped me more than once. Do you know what I mean? With hosting these sessions. I know Carl's mentioned that he'd be available sometimes to do it as well. So I haven't asked either of them, so I don't want to throw anyone under the bus. I don't know what they're saying for the next couple of weekends. But if they could take one each, that would be the ideal situation, or maybe one of them could cover both. But I feel like it's better to kind of have a live thing so that new people can ask questions and, do you know what I mean, stuff like that, as opposed to just watching a recording. You can do that on Wow. You know, you can do that. The recordings are already on YouTube as well. For those of you who don't know, Justin, I'm sure you can post that in the chat. Do you know what I mean? We've got like a whole link full of all the previous recordings that you guys can catch up on. But yeah, I feel like it's good to have a space where there's someone live, where someone can come through. And I had intended on messaging both Albert and Carl before today's session, but I got distracted and didn't do that, so I'll shout them afterwards. But yeah, guys, so that's the breaks basically. If you see me gesturing a little bit more, it's because I've finally got myself a tripod and I want to show off. Do you know what I mean? So
yeah.
Basically, so there we go. I'm on my little triangle thing now. So thanks, Prima. Thanks, guys. Yes. All right, so let's get to it. Today we're going to discuss risk management. Before we do that, actually, 2 things that I want to do. First, I want to find out who is here for the very first time. Whose first Sunday study session is this? Who's here for the first time?
Yeah.
All of you lot are regulars.
No, first time.
First time. Who's that? Shingy?
Yeah.
Nice to have you with us, sister. Thank you. Thank you. Lovely to have you with us.
Thank
How are
you.
you finding it? How? Yeah. What brought you here?
I'm new to the group anyway. I joined in July.
Mm-hmm.
Yeah, so I've had a few ups and downs. So I just thought, you know what, I need to really sort of start from scratch.
Oh, welcome. Okay.
Yeah, I think a couple of times I've been caught out with the margin level. So I'm hoping you can cover that as well. Margin level percentage.
That's going to be probably today, I think. Yeah, I think that's something we cover today. Oh, lovely. Welcome.
Yeah. And risk management especially for small accounts.
Yeah. Okay. Brilliant. No worries. Thank you for coming. Through. And I'm sure that today will be worth your while. You know, I'm really hoping that you get some value from today.
All right. Thank you.
All right, cool. All right. Okay, so before I begin as well, the second thing I want to do, I just want to explain a little bit about myself so that you guys know who you're speaking to, so you know why I'm here, so you know what I'm doing, right? So my name is Nate, as you can see at the bottom, probably about there. And I am a poet. I run events, you know, and do things like that. I'm a full-time creative. I quit my job a couple of years ago. And obviously the lockdown hit me pretty hard because there were no events, you know. So I've kind of come into this Forex space and I've been learning to manage finances. And, you know, I've been kind of learning a lot more about this world. When I first joined, I joined in September and I, you know, didn't know anything about trading at all. I knew nothing, right? And I tried to watch a lot of the videos on WoW and they were great. They were really helpful. But we did a study session similar to this. Wait, you see the gestures, come on. We did a study session similar to this with Carl. And it really helped me because Carl was like, he was like a peer and he was explaining it to me in a language that I could understand, as opposed to, you know, sometimes a lot of the traders use words that I'm not familiar with, you know, or that I have to, okay, I understand the point, but now I have to research about 10 other different things. And it took me a while to kind of get there. Whereas hearing Carl explain it once put me in a position where now every single video I watched on WoW made a world more sense. So I thought that was so beneficial that obviously now that I've started to see more consistent results, now I'm kind of doing a little bit better. I'm still not by any means a six-figure trader. I'm not a multi-millionaire. You know, I don't have, I can't show off money, you know, like that, you know, yet, you know, but, you know, I'm not a six-figure trader. I am a peer, okay? I'm someone who is paying the same as you guys to be here, but I saw value in what my upline did to help me to progress. And what I want to do is I want to share that with you guys. That's all it is. So literally these Sunday study sessions, I can't stress enough, they are not WoW, right? It's good that you're here and it's important that you're here, but it's more important that you go and watch the videos on WoW, because the videos on WoW are what you are paying for. Yeah, you're not paying for me. I am, you know, just going to be doing the best that I can to help you guys get a little head start. I'm not earning enough to teach you how to make money like that. Do you know what I mean? So it's important that you go to WoW to learn strategies. It's important that you go to WoW to reinforce the fundamentals that we're going to be talking about in our Sunday study sessions. Okay, so that's basically what the Sunday study sessions are. They are for beginners, they're for new starters, they're to help you guys get a little head start so that you don't fall over the way I fell over. Because when I first came, like I said, I jumped straight into WoW. I lost a lot of money. It was really painful. It was annoying. I heard some stuff from Carl, same as Prima, you know, and we started a similar time actually, I think, you know, same as Prima. We kind of just like been consistent, stuck with it. And, you know, we are developing, yeah, we're improving, we're learning. And I think it's really important that we share this information so that you guys can, you know, stay on path with us for as long as possible. Because, you know, we definitely want I want you to be successful. Do you know what I'm saying? Every single one of you, I want you to be successful. Why wouldn't I? You know, that's the beauty of this industry, is that, you know, if we were both, I think something that Justin said to me, if we were both selling something, right, whatever we're selling, hair, I don't know, trainers, we can't really sell to the same customers at the same time. You know, whereas with this, we can all catch the same pips at the same time. So, you know, if your trade wins, then my trade has won as well. I want that, yeah? So we're all going to study together, we're going to develop together, we're all going to improve together, and we're all going to win together. That's what we're doing here in the Sunday study sessions. I saw a little message in the chat, so I'm just going to cover that before I dive into risk management. Hold on, guys. I've seen a couple, can't record Albert, yeah, playlist. Margin levels, small accounts. Yeah, that's what we're going to talk about. So down, strength, motivation. The trend has changed every time, same thing. Okay, no worries, Daniel. Yeah, thanks, Justin, for covering that. Yeah, Daniel, we definitely will go through that, bro. You know what I mean? But consistency is what it is. This is what I'm saying. I've been here for, you know, a good couple of months. I've had those ups, I've had those downs. I've had times where I've won a lot. I've had times where I've blown the account. I've blown my account more than once. Do you know what I mean? And it's never fun. It's like you kind of learn, I knew that I shouldn't have done that. Do you know what I mean? Or like, why did I do that? And then you have to get the money and put the money back into your own account and start from the beginning. Start from the beginning. It doesn't matter. It doesn't matter. Consider it as learning tax. If you're committed to success in this space, then consider it learning tax. You understand the potential that the foreign exchange market has. Yeah, you understand the potential. You've seen it with your own 2 eyes, right? You're looking at the market and you're like, I know that if I am able to tap into this skill, I can extract thousands of pounds every day from this market. I know that is a real possibility. If I'm good at this, I can do it. Yeah. So get good. It doesn't matter how much you lose. It doesn't matter how many times you fall over. What matters is that you keep going. Yeah. And, you know, we will see each other at the beach and at the bank. Do you know what I mean? As Kasim says. All right. Let me share my screen and we can start. Hold on. Before I do that, let me just make sure I've not got. Hold on. There we go. And excellent. Okay, fantastic. Boom. Everyone can see my screen? Let me know.
Yes, yes.
Yeah, fantastic. Okay, brilliant. All right. So to begin with, we're talking about risk management. We're going to talk about risk management. So in order to talk about risk management, first things first, we need to understand what a PIP is. Okay, what is a PIP? That is the first thing that we need to understand in order to understand risk management. Cool. Okay, so what we're looking at here is the homepage. These are our currency pairs. Each currency pair is split, obviously a pair is 2, yeah? So each currency pair is split into a base currency and a quote currency. I definitely recommend you write some of this stuff down because we're probably going to be going through quite a lot. So if you haven't already got a pen, then I'm going to count to 5 to give you a second to grab one. 1, 2, 3, 4. Excellent. And if you have got a pen, well done, because you know how the Sunday study sessions go, right? So one on the left is called the base currency. So in the top 3 examples, EUR would be the base and GBP would be the quote currency. EUR would be the base and USD would be the quote. GBP would be the base and USD would be the quote, right? So as you can see by GBP's example, GBP at the bottom is the base currency, GBP at the top is the quote currency, right? So there's no specific rule that I've found that says that one has to be one way or the other. But if Euro GBP, Euro is the base currency, I haven't seen a chart where it's GBP Euro. I haven't seen that before. You know, it's kind of like once you pick one, you pick one. That's basically what it looks like to me. Anyway, we're going to be looking at the Euro GBP chart or the Euro USD chart. In fact, we're probably going to look at GBP USD actually, because that's the one I kind of stick with. The base currency is always worth 1 of itself. The base currency is always worth 1 of itself, right? And the quote currency is, well, the value of the quote currency is determined by the numbers on the right-hand side. So in this instance, £1 is worth how many US dollars? That's the question that's being asked here. £1 is worth how many US dollars? And the answer is $1.38. £1 is worth $1.38, right? You've got the low and you've got the high. That's not something that concerns us too much. The bottom line is that £1 is worth $1.38. Okay. However, where the low and the high does start to make a little bit more difference is once we delve deeper into the pips. Remember the question we're asking, what is a pip? So we can see that £1 is not worth 1.38 using the example on the left, but it's actually 1.38741. Okay, it's actually 1.38741. There are 6 digits, right? So here's what I want you guys to do. Here's what I want you guys to do. I want you guys to draw 6 boxes. 1, 2, 3, 4, 5, 6. 6 boxes. This is where the decimal point goes. Excellent. And we're going to name these. So this box on the right is called the pipette. P-I-P-P-O. Is that right? Yeah. No. There you go. Pipette. This box on the right is called the pipette. Right. Now, if you look at the pipette, you can see that the pipette is actually a tiny little number. Yeah, that is the 6th digit. 1, 2, 3, 4, 5, 6. The 6th digit is a tiny little digit, which is called a pipette. Now, pipette, remember, the question is, what is a pip, right? A pipette is smaller than a pip. Okay, so what does that mean? That means that the next box here, oh, that was a messy arrow, sorry. The next box there, that one is a pip. That one is a pip. It's hella silent in here. Is everyone following me? Can I just get some feedback? Just so I know my internet's not cut out. Yeah. Good. All right, lovely. All right. So that one is a pip. Okay. So we tend to ignore the pipette because in terms of value, it doesn't hold as much unless you're trading NFX, I believe. In which case the pipette then holds a lot more value because it's a lot faster. But with Forex, with the trades that you're going to be getting called on shift, we don't tend to worry too much about the pipettes, and the focus is on the pip. Okay, so which one is the pip? Okay, can I get a volunteer, please? In this example here, which one is the pip, or which one is in the pip section?
It's a 4.
It is the 4. Excellent. Thank you so much. I don't know who that was, but thank you. Thank you. Yeah, thanks. It is the 4. So what have we got here? We've got stop animation. This one is the pip. So for example, then let's say price is at 1.3100, and then whatever the pip is. And it moves to 1.3105, and whatever the pipette is. Can someone tell me how many pips has the market moved?
5 pips.
Yeah.
5 pips, yeah? 5 pips, lovely, nice and easy, simple. So a pip ultimately is a unit of measurement. That's what a pip is. Right, 1 pip, a pip is a unit of measurement. You would say, okay, the market has moved 5 pips today, or the market has moved, 10 pips today. Yeah, the market has moved 10 pips, or even the market has moved, 100 pips. The market has moved 100 pips today. Yeah, and that would mean that the value has gone from 1.31 to 1.32. Yeah, so £1 was worth $1.31. Now £1 is worth $1.32. The market has moved 100 pips in order to make that happen, right? So that's why a currency value is not going to change overnight, but it is definitely going to change, right? Because as you can see by looking at these charts, the market is constantly fluctuating. Up, down, all day, every day, right? The market is constantly fluctuating. However, look at the numbers on the right-hand side, and you can see that it's, okay, look, here is £1.39, and here is £1.40, or $1.40, sorry. Yeah, so, oh, sorry, no, I've got that wrong. There's $1.39, and there's $1.40. So even though there's a lot of movement here, for example, it's all within that range. It's all within that range of 139 and 140, give or take. It actually is kind of a bit lower than that range. It's probably whatever that number, 1.38 and probably 139, I guess. But you see, you catch the drift, right? The market is moving, but it's moving inside a certain price range. So it could stay in between 1.35 and 1.36 for a while, and then go up to the next one, or it could kind of hover in between the two. But for the market to move 100 pips, is something that could take, I guess, a day. Oh, hold on. That probably didn't go according to plan. I was meant to look so cool. Could take a day. There you go. Do you know what I mean? For the market to move 100 pips. Yeah, that could happen in one day. Here again, market to move about 100 pips. That could happen in a day. Look here. Markets moved about 100 pips, right? There are some days, so just for those of you who don't know, right now we're on the hour chart. So in between each of these dotted lines, is 1 day. Yeah, in between each of these vertical lines is 1 day. So maybe if I do it here, is 1 day. Right? So you can see that in a day, the markets maybe moved, you know, 80 to 100 pips. In a day, the market's probably moved. I mean, what is that? Let's do some quick math. Nothing too heavy because my head. Right, we've got 1.3761 to 1.3874. Okay, so 376 to 386 would be 100 pips, right? But it's actually 387, so it's about 110 pips. Is that making sense to everybody? Hopefully everyone's understanding that.
Yes.
Yeah, nice and easy. Brilliant. And that's taken about a day to happen. Okay. So a pip is a unit of measurement. So when, for example, Gus chucks out a trade on shift and says, you know, right now we should enter at 1.37610. Your stop loss should be at 1.3730, and the take profit should be 1.38744. Do you know what I mean? He's calling out a trade, or he might say your take profit should be up here, a little 150 pip trade. That's the trade that is on the chart. That is what the trade will look like that Gus is going to call, right? Or that, you know, DMC is going to call, or that Fred is going to call, you know. Cool. Hopefully that's making sense to everybody. So now we know what a pip is. These Sunday study sessions, obviously we are here to kind of, we're here because we've got a product that is definitely working for us, right? At the same time, me personally, and I'm sure many of you are here for wow. You know, we're here because we want to learn. Yeah, we're here to learn how to trade. We're here to learn how to build, how to develop this skill set. So as Prima said earlier, you know, she's becoming her own signal, right? And she's been here for a minute now. Prima's been here for a couple months, and she's becoming her own signal to the point where she's now looking at charts and reading them herself and calling her own trades. That is a natural progression if you're going to stay in this space, as far as I'm concerned. You know, if you're here and you're just going to be copying and pasting, then, you know, I don't know, man, you're going to struggle, because there's a lot to learn in order to be successful as an investor. It's not something that you can just, you know, take lightly. It's something that you absolutely have to respect, right? This is the largest market in the world. So this is the largest movement of money on the planet, you know, so you definitely want to respect it. You definitely want to take it seriously, and you definitely want to give it your focus. So we know what a pip is, right? We know what a pip is. Let's talk risk management. So maybe we should cover candlesticks as well. No, because I don't want to go too deep into, oh, that wasn't meant to happen either. There you go. Okay, yeah, we could talk about candlesticks, because obviously I want to show you guys some risk management. No, let's not, because we've only got half hour left, and I want to see if there's questions as well. Okay, risk management, come on in, let's just dive in. So, what we do need to discuss, however, is timeframes. So do you remember me saying to you, I guess we're going to kind of cover candlesticks a little bit then. Do you remember me saying to you, oh, why can't I delete this? What's going on? Someone want to, this line here, it's not going nowhere. Yay. Okay. Do you remember me saying to you, in between this dotted line and this dotted line, right, is a day, is a day, right? And we've zoomed in a lot now, but let me zoom out again. So I'm showing you all of these lines now, saying, yep, in between these lines is a day, right? That is because each one of these candlesticks represents 1 hour. Yeah, so there are 24 hours in a day, 24 candlesticks in between each space. That is because we are on the hourly time frame, right? Oh, wrong one. That is because we're on the hourly time frame. So if I hit this button here, you can see we've got a variety of different time frames to choose from. We're on the hourly time frame. We can go to the daily time frame. We can go to the monthly time frame. We can go to the minute time frame, right? We're not going to explore them today, but obviously we're talking about risk management, so I need you to just kind of know the difference. Okay, so let's look at, well, why do I need you to know the difference? Why do I need you to know the difference? Okay, because on the hourly time frame, the amount of pips, the amount of space that one candle is going to move is going to be significantly less than the amount of space that a candle is going to move over the course of a month. So if you've got a candle that's representing the entire month, then it's going to move from perhaps 1.2 to 1.4. Whereas if you've got a candle that's representing the day, then it will show you each step of the way as the month got from 1.2 to 1.4. So it might, for example, like be 1.22, 1.24, 1.26, 1.2, you know, and it will be slightly shorter. And then when you look at the hourly candlesticks, they're not going to move anywhere near as many pips as the monthly candlestick. For example, right? For example, let's look at it in real life. Here on the hour chart, let's just pick the most recent one. There we go. Here on the hour chart, we've got a nice average size candle. Let's call it this one. Yeah. So this candle, this took an hour to form, and price dropped from 1.3902. Ignore the pipette. Yeah, from 1.3902 to 1.3890. 1.3902 to 1.3890. So that's about, what's that, 10 pips? Yeah, so 890 to 900 is 10 pips, and then 902 would be about 12 pips, right? It's even a little bit lower than 8900, as you can see. So, you know, we could give it the benefit of the doubt, guys, and we could say 15 pips. If you wanted to count the wick, let's say 20 pips. Yeah, let's say 20 pips. Obviously, we can all see this candle hasn't moved 20 pips, but let's just say it just to illustrate the point, right? This is on the hourly chart. So now I'm going to swap to the daily chart. Or should I go to the monthly chart just to make the point? No, let's stick with the daily chart. Okay. Now you should be able to see this one candlestick represents the entire move for the day, right? So this candlestick has gone from 1.387, 1.392, so 874 to 74, 84, 94, 04, 904, 914, 924. What's that, 50 pips? If I got that about right, looks like about 50 pips. Yeah, looks like about 50 pips. Hoping that my math is not all bent out of shape, probably about 48, right? So, boom, this one candle has moved 40. And as we can see on this chart, this one candle is not particularly standing out, right? It's a small candle compared to some of the other candles on this page, right? So this is the daily chart where each candle represents a day. If we switch to the monthly chart, then again, we're not going to bother doing the math, but even though the candles don't look particularly extraordinary, yeah, they are all considerably spaced further apart than the candlesticks on the hour chart, that we saw, right? And again, if we switch to the minute chart, just to put the nail in the coffin, right? If we switch to the minute chart, then you can see that one candlestick is, for example, 1.3873 to 1.3875. I've got this black candle up. Yeah, 1.3873 for 2 pips, guys. That candle, which again is not particularly outstanding on this page, it doesn't jump out as, oh, that's a particularly small candle or anything like that, right? That is just the standard. So it can be confusing when you're switching between the different time frames because all the candles look the same. But it's important to remember the pips on the right-hand side, that's what we're doing. That's what we're trading. So the beauty of these pips, right, is obviously we know that we make money on a price per pip basis. So if you enter a trade at £1 per pip and you win that trade, then you're going to be winning at a rate of £1 per pip. Let me see if I can find that 100 pip move that we looked at earlier. It was up here, isn't it? Let's go for this. Let's go for this nice looking one. I like this one. Yeah, this looks like a dream come true of a trade. So let's say you entered here. No. Let's say for those of you who know a little bit about candlesticks, let's just say this was an engulfing candle. I don't think this is, I mean, it is, but I actually feel like it's as a weird engulfing candle because it's way too big, right, for me to trust it. For those of you who don't know what an engulfing candle is, like I said, we've got Sunday study sessions. The link has already been posted. Go and check out the session on candlesticks. We have like a whole conversation about it. But either way, just keep coming back because we kind of rotate about 5 or 6 different subjects. And then, you know, then you're on your own. Then you need to just go and study well. So we kind of rotate about, we'll definitely speak about candlesticks again. And we have spoken about it before, you know. So if you want to know right now, go back and check. If you can be patient and wait. But like I said, I don't think this looks particularly like an engulfing candle to me. It's a bit too big. But let's just say you read it as an engulfing candle, right? How would you trade an engulfing candle? So what I tend to do when I trade an engulfing candle, bear in mind, each of these candles takes an hour to form, right? So I'm going to enter the market here. So I'm going to wait for this candle to finish forming first. Why am I going to wait for this candle to finish forming? Because the candle is not finished until it's finished, right? So let's say this candle actually in the last 5 minutes turns around and drops. Then what am I going to do? You know, if you think about it, the last candle was black, where it's been dropping. The last candle was black. This candle is now being formed, right? I'm presuming that if I were to look at the moving average, it'll probably be bouncing off the moving average because that would be my strategy, right? So if this were bouncing off of the moving average and I were confident, I saw that and I saw this white candle was forming, I would wait for an entire hour until this white candle has finished forming, right? Once it's finished forming and the next candle begins forming, that's when I would enter my trade. So that means I could enter anywhere between here and here. Yeah, I could enter the market anywhere between here and here. Let's just say for argument's sake, I enter at the top of this white candle. Where is that? Let's get an accurate measure. Oh, get an accurate measure. Okay, top of this candle is 1.3792, right? So if I were to enter the market here at 1.3792, where would my stop loss need to be? Where would my stop loss need to be? So I would personally put my stop loss below the wick of the engulfing candle, yeah, as a minimum requirement. I say below the wick of the engulfing candle. If you wanted to play extra fair, you can go below the lowest wick that you can find. You know, me personally, below the wick of the lowest candle gives me the most breathability, right? And do you know why that is? It's because risk management is a composition of 2 things, right? 1, it is your lot size, and 2, it is where you place your stop loss. Okay, so let's say, for example, I entered the market here, right? And I put my stop loss here. As you can see, the next candle would have hit my stop loss. Yeah, so even though there's only a few pips, maybe I should do lot size first actually, so I can make that sentence, I can qualify that statement. Yeah, okay, all right, let's do that. So let's say we entered the market here at 1.3792, yeah, and let's say we just wrote it up to you. What's the easiest? 1.3880 looks easy. So 1.3880 from 1.3792. So 792. So that's 8 pips, takes us up to 80, right? And then 880. So that's 88 pips. Lovely. Yeah, 88 pips. Everyone agreeing with my math?
Yes.
Yeah, 88 pips. Cool. Lovely. Okay, so let's say we've entered the market here and we're going to catch this 88 pip trade. Brilliant, right? If you enter the market at £1 per pip, you're going to earn £88. If you enter the market at 10 pence per pip, you're going to earn £8.80. Does that make sense to everybody? Yeah, I mean, that's why we're all here. Yeah, we all kind of, you understand that much. Brilliant.
Yeah,
okay, fantastic. So the more you invest in, let's say you believe the value of the pound is going to go up, so you invest in the pound. Yeah, the more you invest, the more you believe that it's going to go up, the more you'll be rewarded when it actually does, right? If you invest £10, right, then you're going to earn, you know, 800 quid, right? Is that right? Yeah, that's right, isn't it? It's not 80. Yeah, it's 800 because it's 80 pips. Yeah, sweet one. Do you know what I mean? Look at that. Look at that. Then suddenly, you know, you're in a completely different position because you just lost eight bills on one trade. However, right, your stop loss is the second part of risk management. Yeah, there's two parts to risk management. One is your lot size, two is your stop loss. And in fact, I would say that they need to be considered in the other way around, which is why I was trying to show you the stop loss first before even coming to the lot size. But I just wanted to kind of show you the risks, right? So let's say, for example, you entered at 1.3792 and your stop loss was at the bottom here, 1.3773. 1.3773. So 1.3792, let's say 1.3772. Yeah. So from 1.3792, 8272. That is 20 pips clean. That's a 20 pip stop loss. That's a 20 pip stop loss. Okay. So with a 20 pip stop loss, what should your lot size be? Now, notice that I didn't choose a 20 pip stop loss. The market provided me with a candlestick and a wick. That is where, like I said, where I put my stop loss is below the wick. That's where I put my stop loss, right? Below the wick. So I didn't choose to put it 20 pips below. The market said, this is, this is the bottom of the wick, right? So that's where I would put mine. Now, the guys on shift, I've noticed actually, in many instances, they will call for much larger stop losses. Like you'll see 50 pips, you'll see 70 pips, you'll see 30 pips, you'll see 25 pips. Maybe I'll be trying to get a 20 pip stop loss because I'm trying to earn a little bit more money, but it might not be the wisest thing to do, which is why I'm strongly recommending that you don't come here for strategy. You come here to understand fundamentals, and you go to WOW to learn strategy. Okay. So in my case, for example, I'd put my stop loss here. Now I might get tapped out on the next candle, who knows, right? But let's just use this as an example. 20 pips, 20 pips. If I enter at £1 a pip, I am going to lose £20. If I enter at 10p a pip, I'm going to lose £2. If I enter at £10 a pip, then I'm going to lose £200, right? Now me with, 100 quid in my account, right? Do I want to lose £20 in one trade? Do I want to lose £20 in one trade? Me personally, no, I do not, right? I would prefer to live to trade another day. Now that's only because I don't have it like that. Obviously if you've got a steady source of income and you're willing to, risk 20 quid on a trade for the sake of, if you had risked £20 on this trade, your reward would have been £88. Remember, yeah, if you'd risked 20, your reward would have been 88. So, if you're willing to do that, if that was good for you and you're like, okay, you know what, I'm willing to jump in at £1 a pip, then at least you have managed your risk. Yeah. Managing your risk is a decision that only you can make. No one else can tell you what your risk management should be. It is down to how much money you have in your bank. Yeah, it's down to how much money you're willing to invest, how much money you're willing to risk. The suggestion that I have found to be pretty unanimous among traders on WOW, on YouTube, in friendship circles, is not to risk more than 1% of your account. Yeah, I've heard extremists say 2%, but I have heard people say not to risk more than 1% of your account. So what does that mean? Well, that means if you have £100 in your account, then what's 1% of £100? You don't want to risk £1. Yeah, that's what that means. Now, I understand that for some of you, like me, that's not going to be practical. Do you know what I mean? Because obviously you're here and you want to try and get up a little bit quicker, right? As long as you understand the risk, that is the nature of what we're doing. In an ideal world, you'd have, say, £10,000 in your account and you'd only risk 1%. Yeah. In a less than ideal world, you've got 100 quid in your account and you blow it trying to get up quickly. If you want consistency, then the recommendation is that you do not risk more than 1% of your account. Now, this is why that is so important, right? Because like I said to you at the very beginning of this call, it doesn't matter how good of a trader you are. It doesn't matter how great the trade that you've called is. It doesn't matter if you're on a winning streak and you've won the last 4 trades, it doesn't matter. It's not got anything to do with you. Like it's not any personal reflection on you, on your ability, on your relationship with God. Do you know, it's not got any relationship at all. The market is extremely volatile. Yeah, anything can happen. That is how the market operates. The market is very volatile. All it takes is for the market to spike for any reason, and that will tap you out of your one trade. You know, you can predict what the market is going to do overall, but for you to predict what the market is going to do at any given second would make you a better trader than anybody else on planet Earth. Yeah, so it's important to manage your risk, right? It's important to manage your risk, no matter what you think, no matter how good you think you are, no matter how confident you're feeling. Even if you're thinking this trade here is definite, that's great, but manage your risk. Here's how managing your risk is hard, right? Because if, for example, I did put my stop loss all the way up here, right? Let's say I've got £100 in my account, and I want to risk, let's say I want to risk £10. Yeah, let's say I want to risk £10. And we've entered at 1.3792, right? Now, for me to put my stop loss all the way down here, 20 pips, what is that, 50p a pip? That's not 50p a pip, is it? Is that right? 50p a pip, I think, yeah. 20 pips, at £1 a pip would be £20. At 50p a pip would be 10. I'm hoping I've got that right. However, that means that if I win this trade, I'm only winning at a rate of 50p a pip, right? Whereas if I were to enter, what do we say, 1.3792, and I were to put my stop loss, let's just say 1 pip below, yeah, or 2 pips below, 1.3790, and I wanted to risk £10, I can now enter this trade, right? This is obviously an extreme example, by the way, guys. I'm sure nobody would ever like have a 2 pip stop loss. I don't even think that, you know, MT4 would allow you to have a 2 pip stop loss, but just so you get the point, right? Let's say I were to put my stop loss 2 pips, I could then enter this trade at, say, £5 a pip, £5 a pip. I can now enter with a larger lot size, because if it hits my stop loss 2 pips, I'm still only going to lose the same £10. Do you understand? If it hits my stop loss, I'm going to lose £10. So I have calculated my lot size based on my stop loss. I have calculated my lot size based on my stop loss. Okay. So with Shift, we're quite fortunate because we don't have to. Hold on, let me come back, do the eye contact thing with everybody. There we go. With Shifts, we're quite fortunate because we don't really have to do all of that heavy lifting. You know, the guys will post trades and they will say, you know, okay, so we think you should enter here. This is your take profit. This is where your stop loss should be. So they will say your stop loss should be 50 pips. Your stop loss should be 35 pips. Your stop loss should be, you know, 70 pips, whatever. Your job is to decide 2 things. One, do I want to take this trade? Yeah, do I want to take it? Because if it's got like a 70 pip stop loss, it might not be your cup of tea, right? You might just think, do you know what? What's the point? Let me just wait for another trade. There's always another trade. You know, if you win 1 trade a week, then you know your account is growing, right? So yeah, you might think this one's not for me. Let me be patient. Let me wait for one that I'm a bit more confident on. I've been studying 2 or 3 currency pairs. As soon as I see a trade come up for one of those, I'm going to jump it. Yeah, that might be your attitude towards it. The other thing you're going to decide, if you do decide to take the trade, is what should my lot size be, right? Those 2 things there are the essence of risk management. That is the crux of it. Yeah, that's the main point, right? Where is your stop loss? What should your lot size be? So once you know where your stop loss is going to be, Gus has said 50 pips. then you're now thinking, okay, 50 pips. If I enter this trade at 10p per pip, 50 pips, I'm going to lose £5. If I enter at £1 per pip, 50 pips, I'm going to lose £50. If I enter at, or you know, you can, the way that I do it, like I said, I start off with the 10s and the 1s, right? So I'm like, okay, if I enter at 10p per pip, I'm going to lose £5. That means if I enter at 20p per pip, I'm going to lose £10. That means if I enter at 30p per pip, if I enter at 40p per pip, and you can kind of, you know, follow the math up from there. That makes it a lot easier, at least until you get quicker at it. And then you'll see it at a glance and you'll be like, okay, boom, I'm going to jump in this one at, you know, 40p a pip. And you can see it quite quickly because you know what you want to enter, you know what your risk management should be. You're used to it by this point. I think that's kind of all I'm going to say on risk management for today. I feel like I've said a lot. I feel like I've said enough. Does anyone have any questions about risk management? Was there anything that anybody there didn't understand?
So if you enter multiple trades.
If you enter
multiple trades.
Good question.
So that's where the problem becomes, isn't it? If both of them, if those multiple trades start to retract, go the opposite side. Because I've been caught out. I mean, I wasn't aware about the margin, what you call it, the margin percentage. So I've been reading about it because at one point, one of my trades got kicked out. And then one was left because obviously I'd entered multiple.
Okay, you got margin call. Oh, I see. Yeah. If you're in multiple trades, you when I say risk 1% of your account, I don't mean in one trade. You know, trading is, remember that the foreign exchange market is the biggest market in the world. So that means that while we are playing the market with small accounts, the market is definitely going to favor those with larger accounts. You know, so when I say risk 1% of your account, that should really be per day as opposed to per trade. But again, like I said, that's not realistic for those of us with like 100 quid in our account. Do you know what I mean? It's not realistic. They're going to risk 1% per day because you're getting a lot of calls come through, and a lot of them also have a very high success rate to TP1. So take it. Do you know what I mean? Take it. However, manage your risk on every single one of them. Do you know what I mean? On every single one of them, at least do the math, calculate and think, right, you know, what am I willing to lose? And make sure that by the end of the day, you're up. Because even if by the end of the day, you're up by £10 or you're up by £5 or you're up by £3.76, yeah, you're up. That's it. If by the end of the day, you're down, then, you know, you want to kind of take a breather and come back the next day with, you know, with new energy. But really, the focus is on every single day. You just want to try and end up a little bit, up a little bit, up a little bit. There's a really good book called, is it the Compound Lifestyle, I think it's called. I'm gonna find it and try and send it to you, Shungi, yeah, because it's a really good book. But it talks about compounding. Yeah, it talks about compounding. And the best way to be successful in this space, I'm learning, is to compound. So obviously, even if you're in 5 or 6 trades, if you've got a small account like that, it might be worth focusing and slowing down instead of trying to run and taking. You don't have to take every single trade. That's something Prima taught me, actually. I didn't even think. Do you know what I mean? Prima's come, she's like, you know, you don't have to take every single trade. I was like, oh yeah. You know, you really don't. Just because every single trade comes through doesn't mean every single trade is going to win. Doesn't mean every single trade is going to lose. Doesn't mean anything. All it means is that you have a large choice, a large selection to choose from. Yeah, you don't have to grab every single one. If you can take 1 or 2 and they're successful, yeah, then you're up for the day. Then put your phone down. Do you know what I mean? And that's it. And keep it moving. Come back tomorrow. Do it again. That is a system that works. And if you're managing your risk, then you won't lose that much that day. Do you know what I'm saying? You won't lose that much that day. It's like, okay, do you know what? I lost all 3 trades today that I placed, which means I lost 15 quid. That's annoying. Do you know what I'm saying? I'll jump into another one tomorrow and hopefully win 20. You know, brilliant. But it's not, it's not like, obviously the better your stop loss, like the lower your stop loss, the larger your lot size and the better wins you're going to get. But not every trade is going to be like that, right? So instead of trying to think about earning more, just think about managing your risk the same every single time. Do you know what I mean? When the good trades come, you're going to win loads and it's going to be great. Other times, you're only going to win £2.70. It's fine. As long as you're losing the same every time and you're managing your risk consistently. Do you know what I mean? Then when the good wins come, that's when, you know, you're going to start climbing. You're going to start building your account. And other than that, it's just about managing and not going overboard with the losing, not just going crazy and just like, I've lost and revenge trading and trying to catch up. Do you know what I mean? You're trying to sort of make back money you've lost. And those are some very common mistakes that people fall into. Yeah, so that's kind of what you want to be aware of. Was that helpful? I hope so. We're here every week. We're here every single Sunday. Yeah, and this is what we do. You know, like I said.
No, it is helpful because I mean.
Say again, Shungi. Hello.
Yeah, no. I was just saying it's really helpful because I've had to take a step back and reflect and sort of look at where I've been too quick about thinking. Because sometimes you get tempted, something comes up and you think, oh my God, I'm just going to enter a few more. Something really helpful just listening to what you're saying.
Yeah. Thank you. Anybody else have any questions? That was a good question, by the way. Thank you for that. Yeah, does anyone else have any questions? Anyone at all? Have more than one account? Absolutely. I've got more than one account. That's a good point, because, you know, some accounts, this is something Justin put me onto, you know, you can have one account where you just take shift trades and you just post them in, and you can have another account where you trade yourself, you call your own trades, right? And remember, once again, you don't have to take every single shift trade. So literally, you can have an account which has maybe got 50 quid in it, you get a shift trade pull through, you put it on that account, you switch back to your main one, and then that's where you live. You sit there, you study the market, you try stuff out, you know, you do whatever. You get 15 more shift trades come through and you ignore them. You got one trade that's already running.
I've got a question.
800.
Yeah, I've got it's not really a question, it's kind of a request or whatever. Yeah, and I've got one account, but I've tried to open different accounts with different brokers. Unfortunately, they only give the leverage is 1 to 30, and I've tried, you cannot trade with that little leverage. So if anybody knows any other broker that can give more than that, then
who is your sorry, who is that? Is that Rose? Hello, Rose.
Yeah, hi.
Rose, who is your upline?
My upline is not in anymore, so I'm a freelancer.
Wow. Well done for sticking it out. Come on. Oh no, okay. All right. Because I was gonna say normally that's something your upline would help you with. But Justin just posted a good suggestion, TIO Markets. That's who I'm with as well, TIO Markets. Who is it that you're with?
Globe International.
Okay. All right.
FX Globe International, yeah.
Try TIO Markets. They're really good. You know, sometimes they'll even give you a call and give you some training. I've had a couple of phone calls from them. You know, they're really helpful. Never had any problems with them. I think other than the withdrawal minimum is like 50 quid. But other than that, you know, they're good to go.
Yeah, I've got I tried others and they only gave me 1 in 30, which you can't trade with that really with a small account. Yeah. Anyway, thanks very much for that.
No, you're very welcome. You're very welcome. Yeah, leverage is an important thing to study as well, actually, guys. If you guys do get a chance, well, I would even recommend that you make time actually to kind of have a look on WOW, have a look on Shift, and just kind of get an idea of what leverage is and what leverage you're using, because that will help you to stop over leveraging. your account. Brilliant. Thank you for that, Rose. Thank you. Anybody else? Any other questions? Thanks, guys. Okay, cool. Yeah. Did anyone get value from today? Did anyone pick up anything interesting? You guys got some value from today?
Yes, Matt, thank you so much. I can now put my own stop loss. Remember, I was asking, how do you calculate stop loss and take profit? Now I get it. I got it this time from this session.
Nice one. Oh, brilliant. Oh, that's good to hear. Oh, good
Yeah,
stuff.
thanks, mate. It's been really,
Peace,
really
peace.
useful.
Good
Good to see you
to
too.
see you.
Yeah.
Thank
Okay,
you.
brilliant. Guys, that's me. I'm going to go on about my day. I hope you guys have a profitable week. One more thing I just want to reiterate. I mean, I always say this, but and I know I've said it already, but please, please, please don't let this be the only study that you do between now and next Sunday. Yeah, please don't let this be the only study that you do between now and next Sunday. Make sure that you are plugging in. The more you plug in, the more successful you will be. That is literally all there is to it. The more consistent you are, the more you put in, the more you will get out. It's like you're at the gym. You can have a gym membership, and that's great. You can go to the gym once a week and do the class, and that's great. Do you know what I mean? But if you go to the gym by yourself 3-4 times a week, you're going to start seeing gains. Do you understand? So, put in the work and you will get the results. That is how everything works, but we are here to create a platform for kind of new starters. So if you have any new starters, or if you have anyone else that's kind of just brand new and you just want to kind of pick up the fundamentals, like I said, that's all this space is for, the basics. That's all I'm going to be teaching, at least until I got 6 figures myself. Then I will start showing you strategy and this and that. But for now, I'm just talking about fundamentals, basics for new starters to help you guys get a quicker start. So any other new starters, feel free to send them here. Other than that, have a fantastic week, and I'm going to see you guys next. Well, I'm not going to see you next Sunday. I might not even be able to log in actually, because I'm going to be running around helping my friend with some work on the weekend. So yeah, I'll see you guys in a couple of weeks, but I'll still be in the group chat. Obviously, feel free to message me. I'm going to try and catch the recordings if we do get some sessions, and I don't want to leave you guys, so I'm going to try and make sure that I can get someone to cover. But bear with me. Obviously, I'll post in the group if that does happen. Other than that, yeah, thank you everyone for coming through, and have a good day. Yeah,
Thank
bye.
you.
Thank you.
Thank you.
Thank you. You too.